All right, welcome to the live analysis session. So, as you can see, the analysis I gave you guys last week, if you followed it, you should have made some money on something, any US dollar pair. But you can see what we have here. So I'm going to zoom in. I won't take too long today. Um, just want to do a quick one with you guys. So the last 2 weeks, we had a high here that didn't return back into the supply order block. And I was saying that the structure of the price on the lower time frame, so D1 and below, we had a clear sign that the price, probably towards Thursday, Friday, where the price was going to push long. And you can see that into this week, the price has come in here and filled the unfulfilled deficiency. Now, the thing is, though, I think the price is definitely going to do more than this because we have a liquidity void here that goes all the way up to 106, and we have equal highs here at 104. So my thing is that I do believe the price is going to take these highs. Now, if it's going to be in this week, I don't know. Now, funny enough, this week is not really high impact news intensive. And even though there is high impact news, it's not the highest on the list, like I was saying yesterday. So there's not stuff like interest rate decision or unemployment rates for the US. This is tomorrow we have retail sales at 1:30 UK time. Which of course the market can make a move with. Now, the expected result is 0.43. The previous result is 0.3. So that little bullish uptick in price, if it actually comes out to be as expected or even better than expected or something, a better expected reading, that will help the price to push further low. Now, currently, as the US Open situation has happened, I had this order book marked off on the hourly time frame. I'll show you what I was looking at. So on the H1 here, I had this demand order block that's been formed. And you can see the bodies are respecting the area very nicely. And we've just had at 2:30 a spike in volatility and the price is pushing up. I do think watching the way the price is going that we are going to continue into a very strong long throughout the day. You can see it's rising as I'm talking. So I took gold today. I was in profit by like 1,200. It did pull back a bit when the 130 news has come out, but I'm still in profit by quite a good amount. I'm gonna be holding it for a little while. That's my only trade for today. If we go over to the charts and take a look. Now I'm a bit of an old school guy. I like to use MetaTrader, but I still like using TradingView sometimes. But if we just take a look at all of the major pairs, this is what I was talking about, guys, that you know what? I made up my mind that I want to focus on major pairs for the entire year. I don't want to deal with crosses at all. I'm going to cross them off my list and literally no pun intended at all. I just want to look at the major pairs and gold because, again, guys, the more confluence you can have, the more evidence you can have towards a hypothesis of a trade, long or short, whatever your trade idea is, the better it is. And in the market, there's nothing really like US dollar pairs in terms of confluence because we have the dollar index, we have US Treasury indexes that we can look at and charts that can help us to have additional information and do intra market studies, which we can't actually do with other pairs like pound CAD and etc. Maybe you might be able to, but it's not enough for you to capture a general trend. Like at the moment, AUD USD, if I just drag it on the chart really quick, pound USD, gold, NZD USD, they're all moving in the same direction, which is short because the dollar's gaining strength. Whilst we have USD CHF, we've got USD CAD, we've got USD JPY, all pushing in the bullish direction, which shows a very strong dollar denominated trend or dollar dominated trend, I should say, which is giving us a very clear correlation of what's going on right now. So in moments like these, it's best for you to just work with the dollar. Now, don't get it wrong. A few weeks ago, there was an off correlation. US gold was going long, didn't make any sense. Whilst AUD/USD is going. So I understand that. But in general, when there's a general trend, you want to jump on the wave. Now, my best advice to you, if you haven't taken a trade yet for the week because the market kind of started moving out, things like pound USD, it wasn't really fair because pound USD is a pound pair. But as soon as the new day started, the Asian session, the price was already dropping, which is not really that fair. I do get that. Okay. But in the meantime, what can you really do? Well, today we've had what I call the general trend, and the general trend just means when we don't have any reversals between sessions. So the Asian session, the pound USD went short. The London Open to the US session, or the pound USD continued going short. The US session price continued going in the same direction. When we have a situation like this means that we're in a full-blown trend. So for me, all I would say, guys, is that if you want to get in, the only way I would suggest for you to get in is to find some sort of breakout point where you can scalp. Because right now the parameters for doing this, I'll give you a few tools that you can go for. So I'll write the notes here so that you can go for it. So number one, if you want to capture a trade right now, main things to do would be to look for liquidity voids. Okay, when the market is in times like these, this is one of the best times where market makers will be looking to fill out previous liquidity voids. Okay. So look for liquidity voids. That's number one, definitely. And if you want to find a liquidity void or you're not too sure of the definition, it's when the price delivers, or when we have price action where price is delivered on one side of the market and we don't get matching price on the other side. So for example, between this point right here, so this is the high of that candle, until this point right here. Now we have to omit a little bit of it because right over here, this low is around about the same length. So just take it from here anyway. But between here and here, you can see that we just have bullish action. There's no bearish prices offered. So between here and here, we have a liquidity void. Another example, if I pull back just a little bit here, here's another liquidity void. So we have one here, and then we have one over here. Could just use this. This is another liquidity void. So in moments like this in the market, when it's moving in this manner, liquidity voids can be very easily filled out. And when that happens, it means that we can create breakout opportunities for ourselves. I'm not expecting any reversals or anything like that in this kind of market right now. I don't think it's time for that yet, but we can definitely look for breakouts. Now, over here on the H4, what's the second thing to look for? It's going to be, I'm going to give you a tool here to use. I'll write this quickly. Second thing to look for would be order blocks. So, all right, in this case, previous supply and demand order blocks. And specifically, the ones that we're looking for to take a breakout trade before a liquidity void. Okay. Liquidity void. So in this case, we have this order block here, demand order block. This demand order block is just before or just after, depending on how you're seeing it, but is right now is just on top of this liquidity void from the past. So what can we do here? Well, now this is basically the H4 view, and we can map this down to lower time frames. But if we get a break beneath this previous demand order block, then price will flip the use of this demand zone into a supply order block, which means selling pressure will be emerging from this zone. On the return here, when it pulls back, we can look for an entry, stop loss just above the high, and we can ride the wave down to the next available liquidity void. Okay, and if you're really brave with it and the price is dollar index is giving us signs, which is again why the dollar index is pretty cool, because the dollar index can give you that extra confidence to say I'm going to swing for a bit longer. Now, of course, this is a very far distance away. So, of course, I think it'll be better to take it in strides. So, having it over here, somewhere here, targeting to get back in here first, which so there's not a bad amount of pips, 88 pips can do a lot depending on your lot size, you know? So something like this, and I'm just using pound USD as an example. So if you take this on board right now, this is exactly what you can do for the meantime to get yourself in a position where you can still capture something. All right, now time of day does matter. So I wouldn't recommend doing this in the Asian session because I don't think the price is going to repeat itself with this movement. I think that is just that because the price was in accumulation for so long, and yesterday I believe was Martin Luther King Day, the liquidity was already flat. So all of the orders from yesterday have just kind of piled on to today, which has just given rise to these very strong movements. But I think tomorrow, or even between now and tomorrow, you can try to get yourself in there. Now, on this particular pair with Pound USD, the H4 is a lot more clear than the H1 is. On the H1, the order blocks become really small and all over the place. So I wouldn't recommend, trying to trade from there. But of course, because it's the H4 time frame, you have to wait a whole 4 hours to see what the price is going to do. So you can apply this principle to any pair, really. I'll say go for the H4, look at the weekly first, then get down to the D1, see what's going on. Start from the H4. And if you're lucky enough to find a H1 kind of area, you can go for it. I'm just searching for one as an example. See if we can grab one here. Now you can see with AUD/USD, the projection pay out perfectly. The price has already almost filled this liquidity void I discussed. So there are different options you can go for. So take the time. This is all I wanted to share with you guys today. Have a look and see if you can find something for yourself, and we'll continue tomorrow again. And everybody take care.